Welcome to the Wealth Multiplier Podcast. Thanks for joining us if it's your first time here, and thanks for coming back if you've been here before. My name is Laurent Meunier from Safe Pacific Financial, and I'm a partner and advisor at the firm. We're based here in Vancouver, and we have clients all across Canada. Today, we're joined by Suzi Park. She is a portfolio manager at Harness Investment Management, which is the firm that we've partnered with to provide the investment solutions for our clients. We're going to be talking about a few things today. So number one, we're going to talk about why we're working with Harness. How did we get in contact with them and how we've been working with them for some years now. We're also going to talk about how their platform is very different than a lot of investment platforms in Canada because they have a very strong digital forward way of operating, which really is in line with the way that we operate and the way that our clients want to work with us here at Safe Pacific. We're going to get into some details about how they are a fiduciary. They have a fiduciary duty to clients and what that means for you. And then we're really going to get into what we get into in all of our podcasts and all of our videos. It's wealth building, grow your wealth, protect your wealth, and how do you do it? So if it's all right with you, we'll get started. So we're going to start by introductions because that's a good place to start. Suzi, do you want to maybe tell us a little bit about tell us a little bit about Harness, tell us a little bit about who you are, types of clients that you work with. That's a good start.
Absolutely. Thank you for having me here. My name is Suzi Park, and I'm a portfolio manager at Harness Investment Management. And I'm a CFA charter holder, which stands for Chartered Financial Analyst. And a little fun fact about me is I used to be a classical violinist before turning and changing into the world of finance.
Right.
I would say the type of clients that I work with is kind of everyone and anyone under the sun. And what's unique about that is I have clients ranging from students who just came out of college working their first job all the way up to pre-retirees and post-retirees. And then from an occupational perspective, I would say the range is broader. So I have farmers, doctors, lawyers, successful business owners. And it's kind of unique working with Harness because I get to be able to work with so many different types of clients.
And then do you want to tell us a little bit about what is Harness Investment Management? What's the platform? Where did it come from? How does it work?
Yeah, absolutely. Our CEO, Sam Seif, is a serial entrepreneur. And when he was taking a look at the financial services industry back in 2012, he took it as his personal mission to bring to Canadian investors and financial advisors the best platform there was and to bring the best top-tier investments to clients as well. So in 2019, Harness was created specifically to work with for financial advisors so that they could service their clients and bring those top-tier investments. And ultimately just to bring the best investment experience for everyone across Canada and not just through the bank and just mutual funds. And he really took that as his personal mission to kind of have it available across Canada. And since 2019, Harness has been working with different financial advisors across Canada. We have advisors and clients across Halifax all the way to BC. To my knowledge, I don't think we have any clients up in the territories, but not yet.
Right. Yeah, Sam Seif is a big entrepreneur here in Canada. We've met him a few times. He definitely takes up the whole room when he walks in. Everybody knows he's there. And so he is the head of Purpose Investments, and Purpose is the parent company of Harness.
Yeah, and lots of people may know Purpose Investments more than Harness. I don't know if you've traveled with Air Canada before, but our advertisement is in that screen.
It's in the magazine too.
Yeah, absolutely. And you can see Sam's face. So Purpose Investment is the parent company. Actually, Purpose Unlimited is the parent company. And Purpose Investments, we have now about $22 billion in assets under management. And Harness is the subsidiary specifically tailored to work with financial advisors. And we were able to bring Purpose Investments to our clients through Harness.
Right. And then kind of the way that we connected with Harness, we've been there since almost day one. We were a part, as some of our older clients would know this, that we were part of Wealthsimple for Advisors. And then Wealthsimple for Advisors got spun out from Wealthsimple. And the entity that was spun out into was Harness. And then I don't know who invested in it, but I think it's all very similar-ish people.
Yeah, absolutely. So everybody who's backing up Purpose Investments all the way from the top has supported that transition. So a lot of the advisors, before I got to Harness was at Wealthsimple, and that transition from Wealthsimple to Harness was, I think, 2019. Mm-hmm. And, a lot of the advisors still stayed with us and saw us develop, which was took a couple of years. But I think where they are now, I think they're really happy with Harness and where we stand. We're also big on technology. So we invest a lot in technology. Sam is a big tech entrepreneur also, I would say. And so he's invested a lot in Harness and making sure that the onboarding and their client experience is ultimately the best and second to none.
Mm-hmm. And this is a big reason why we are with Harness, right? We could work with any investment firm that we want, if we wanted to. And really, it was betting on the team. So the team that created it, we trust that they're going to do a good job and that they're going to be really good at it and going to do it really well for a long time. But then also the very digital first kind of way that the platform works was really important for us, because we are a mostly digital advisory agency. And so we're also like to be technology forward, and a lot of things in our investment world or the insurance world are really backwards when it comes to technology, right? And you can just see that they're years behind other industries. Whereas working with Harness, the whole process is digital, the onboarding is digital, DocuSign is built into the system for people to sign. We're not printing any papers and mailing anything, which you do have to do at other investment firms, which is not something that we want to do.
Yeah. And I would say, we get a lot of feedback about how digital the platform is at Harness. And it's not just about efficiency, but, going back to Sam's mission, he really wanted to bring accessible and the best top tier funds to everyone in Canada. And if we're just located in Toronto or Vancouver, that's very hard to do for people in Alberta or Halifax or Winnipeg. So to be able to kind of integrate technology seamlessly, it means that everybody can have access and through their financial advisors, no matter where they are. So I've had tons of great relationship with other financial advisors across Canada. With Safe Pacific, it's nice because we're in the same city, but it just creates more opportunity for me to be able to work with other people and service clients at the end of the day.
So that's a good little summary of kind of like who's Harness, who's Suzi, how did we get here, why are we working with them, and now really specifically about kind of our clientele, right? We, as you know, if you've been watching this channel, that we really work with Canadian business owners, with families. They usually own real estate. They're pretty successful. Their corporations are set up correctly. How do you see that type of clientele working really well with Harness? So a business owner who's got retained earnings, maybe there's a holding company there, there's kids in the picture, probably some real estate. How do you guys work with that, and kind of where do you see that direction going?
Yeah. I think that's a very good question. And I think high net worth individuals, families, and successful business owners, I think they need something different than their equivalent status perhaps 20 years ago.
Right.
What I mean by that is a lot of individuals have access to unlimited stock research, journals, blogs, educational books, and social media, the accessibility of social media and available information around investments. So generally, they have a good sense of what it is like investing in the S&P 500 index or the TSX index. And when they're looking for advice from you or someone like myself, they're looking for something else other than just good money advice. And what it comes down to is, working with someone, a portfolio manager and a financial advisor who really understands tax and how it affects their investments and their unique circumstances. And so I think that's number one, very important, having someone that understands how taxes are implemented, because I think number one enemy when it comes to high net worth individuals is tax. So to be able to know those issues and to probably be able to identify and tackle those issues, I think is key. I think second, you want to be working with a portfolio manager that understands private assets. So private investments, securities that you wouldn't be able to find in the public markets. So not just your index funds, which are great, but clients are getting smarter and they want to be able to find different investments that are not, tied to the regular market. They want to be able to diversify and find different sources of returns. So I think working with someone who has an in-depth knowledge of that, I think is incredibly important. And then I would say, the other really important thing is that I would say they want to also work with someone that challenges them.
Okay.
It's not just, okay, I will get you X amount of return based on your circumstances. I think it's important that the people that they work with ask questions like why, and
what are you trying to do? Yeah.
What are you trying to do? What happens after the first 5 million and then the next 10 million? What are you trying to achieve? I think trying to solve that through that and where they are in their life is incredibly valuable and goes far beyond just a regular good investment portfolio that I can give them.
And that's very similar, and this is why we work well together. It's very similar in the way that we approach clientele. It's not just do this. It's more about finding out what are your goals? Yes. What are your concerns? What about if this happens? What about your business partner? What about if your family, this happens? Or what if you move? What if, family's coming from a different country? There's so many other things that affect investments, not just the rate of return of the Magnificent Seven or something like that, right?
Exactly, yeah.
Yeah, so you were saying that a big, enemy to wealth building is that tax that just takes the chunk out. And simple but not easy way to mitigate against that and to plan around it is just in what type of account do you hold the funds. So with Harness, obviously you guys do the basics like RRSPs and TFSAs, but what other kinds of what other kinds of accounts do you guys hold? Can we hold everything with you?
Absolutely. So as you mentioned, we can hold all sorts of registered accounts or ESPs. So we try and make sure that our clients are maximizing those registered accounts first. And then we also have, we can also facilitate certain group RSPs if that is if that's relevant. And we also have non-registered accounts. We also obviously have corporate accounts as well. And most of the accounts are also available in US denomination as well.
Oh, okay, cool. And that's when you're doing the general reading online about how to invest, that is a topic that really doesn't get talked about enough, is where do you hold it? It's not about what stock or fund or whatever you hold, but it's where do you hold it? And that's really important. So working with a good portfolio manager and working with us to say, okay, put it in this account, put it in that account, put it in that account. But you talked about custodians. So this is a thing, again, not a lot of people know about, but often with these investment firms, the money is ultimately held somewhere, and that's a custodian. So there's a few different custodians in Canada, but maybe you want to tell us about yours. I know who it is, but we'll let you.
Yeah, of course. So this is a good point because a lot of people think that their money is held with Harness, and they start Googling Harness and they think we're not a registered firm or we're not a bank. Mm-hmm. So the money is actually held with Fidelity Clearing Canada. So that's our custodian. And we chose to work with them. We've consolidated in the past because we found them to be the best. They're the most efficient. We find their software to be up to date with today's technology, which is great. In terms of the protection, because a lot of banks have the CDIC protection, which covers up to $100,000 per account. With Fidelity, we do have a CIPF, which stands for Canadian Investor Protection Fund. Mm-hmm. And that means if, for instance, the investment dealer, so Harness in this case, were to go bankrupt or something were to happen, then clients would be covered up to $1 million per account. So that's some sort of assurance from the client's perspective. So we have that there. And working with Fidelity has been really great. Throughout my career, I've worked with different custodians, and I have not a single problem with Fidelity so far. So it's been good.
Yeah. So the custodian ultimately is where the money sits, and then Harness directs where it goes and what it gets invested in. But then also Harness can't take it out. Only you, like only the client has access to, like Harness can't take your money from there. They can only make investment decisions. They can't withdraw it and go use it for something else. Only you can do that.
Yeah. So
like the client. So.
Yeah, those checks and balances and making sure that the money goes to the client is all Fidelity. They have their checks and balances to ensure that I can't take the money, for instance. But as their discretionary manager, like someone like myself, I do have the flexibility to be able to take money from the client's bank account and then put it into Fidelity, or vice versa. I can send money to them. And that's been really efficient. And a lot of clients have taken advantage of a lot of that because, they don't have to go to the bank to sign some paperwork. I can initiate a transfer and it can be in their bank account within 2 to 3 business days.
Oh, cool. Yeah, that's quick. I don't think everybody knows that sometimes when you're moving money between investment firms, like it could take 30 days, 60 days, 90 days, not 1 or 2. But I guess that just depends on if it's coming from somewhere else or... So Harness also offers a bunch of different ways of investing. So there are a few different strategies, like the big ones that you'll see on their website would be called a core strategy or a focus strategy. So if you're just Googling Harness, you'll find those right away. Can you just maybe talk about what's a core strategy? What's a focus strategy? What does it mean? Who's it for? What are you trying to do with those?
Yeah. When I'm explaining core strategies and focus strategies, I like to use the analogy of building a cake.
Okay.
And this speaks really well for clients because it kind of presents a picture. So core strategies are kind of like it serves as a foundation to a client's portfolio. And that's determined by the client's risk tolerance. So whether if the client is a conservative, balanced, growth, or sometimes they're 100% equity investor. So the cake equivalent would be, do you want a vanilla-based, chocolate-based, or red velvet-based? Okay. And that would make up the majority of your portfolio. So a tax-free savings account, RRSPs, and non-registers. And that would just be the foundation to a client's portfolio. Then you start adding the focus strategies. And this would be like adding the icing, the different flavors, and at that stage is where you start to really tailor the client's portfolio. Much like in cake, you start to put the icing and how much icing you want to put, and that starts to become a unique cake in itself. So similarly with the focus strategies at Harness, what we have is we have private assets, so private investments. We have the longevity fund, which is sort of a hybrid between mutual funds and annuities, which is really great for retirees.
Okay.
We have the in-kind exchange program. We also have cash management strategies. So all these different tailored solutions for clients, and it kind of depends on what the clients are looking for. So I might add, 10% of private assets. I might add 5% of longevity. And that starts to look really tailored for the client just based on what they're looking for. So that's kind of how I would describe the core strategies and the focus strategies. And sometimes clients are just looking for like a plain chocolate cake, and that's all they need. And that's completely fine. Not everybody has to have a tailored solution. So often I'll meet with clients, I'll listen to them, and at the end of the day, they're just looking for a low cost chocolate cake, and that's all they need.
Right.
But what's important is that you do have that conversation with them. You identify what they need, and you just listen to what they're looking for.
Okay. And then when you talk about the private investments and stuff, could you maybe just elaborate, like, what does that mean? So a lot of the stuff that people would just generally know from a portfolio, there's going to be stocks, ETFs, potentially funds and things like that. So private, what's a private investment? Private
investments tend to have an uncorrelated return compared to the public market. So it's really nice for diversification. It tends to have a higher return with less volatility, which everybody likes. Now, people might think, Suzi, that sounds great. Why doesn't everybody invest in private investments, right? Higher returns, lower volatility, sign me up. The unfortunate thing with private investments nowadays is that although it is getting more accessible, previously it wasn't so accessible, and it was only accessible to high net worth individuals, what we call accredited investors. So now it's getting more accessible, and Harness is really trying to get everybody access to these alternative investments because they do have great returns. They provide diversification, uncorrelated returns. So it's a fantastic addition to everyone's portfolio.
I guess just to define like uncorrelated, it's if the markets are going up and down, these don't go with it. They have their own, I guess, way of being and their own.
Essentially, exactly. Yeah. So it doesn't mean that it doesn't come with risks, right? So they have their own volatility. They have their own risks. It's just that when someone is invested 100% in stocks, then they're subject to the 100% market risk. But if you add in fixed income and alternatives, now you have uncorrelated sources of returns. So over time, you might be actually coming out ahead versus someone who has 100% equity stock allocation.
And then maybe walk me through. So what happens if I want to participate in this? If I want to come open up an account and set up these core or focused or private strategies and stuff. So how do you work with me or with a new client? What kind of process do we go through? How do you find out if I'm suitable for this or not suitable for that? What do I want to do? How much am I trying to make?
Yeah. So typically what it looks like is a client will approach you with interest. You know, they'll say, I have this, RSPs, TFSAs, and I want to get a good return and get some advice. And so what's nice about Harness, and I'll reiterate the fact that, we're heavily invested in technologies. You as their advisor would be able to sit down with the client, and it doesn't have to be with me, and I could be there as well, but you can open up your laptop and essentially input the client's information and kind of have the account open within minutes of that meeting. And that's really nice with the Harness platform. And so that's kind of where the relationship starts, I would say. And then once the account is opened and then the transfers are initiated, banking account is all set up, then that's when I would enter as a portfolio manager. And I would also look at the client's risk tolerance. That's one of the criteria of we ask the clients to fill out a risk questionnaire so that we get a sense of where they are in terms of risk and how comfortable they are. And then that's when I would come into the picture and say, hey, Lauren, let's have a conversation with your client, talk about the different investment strategies. What are they looking for? And then kind of go from there.
Yeah. And it's a pretty good, smooth process working with them. We get pretty in depth asking questions to clients to really understand their current situation, to understand their goals and their concerns, what they want to do in the future. And then, so you'll get that once with us and then again, with Suzi or whoever portfolio manager at Harness, where they will ask you like quite a series of questions to really get to understand like what is your situation and what are you trying to do and how can we best set things up so that we can be achieving your goals, right?
Yeah, exactly. And because I have a fiduciary duty to act in the best interest of a client. So often clients will say, well, I just talked to my advisor. Why do I have to talk to you? Well, I think the way that I explain it, and it makes sense to me, is that clients kind of get too professional for the price of one.
Yeah, that's a good one.
So you can talk to your financial advisor, but I also have to talk to you to make sure the information that they deliver to their financial advisor makes sense in implementing their portfolio. So sometimes it could be annoying from the client's perspective, but I do think that's an added level of due diligence and fiduciary duty that we have.
And we find a lot of people, they feel they're not ready or they don't have everything perfectly organized. So then they'd like delay making decisions or they don't reach out because they say, well, I don't have every single piece of paper that I ever thought I would ever going to need. So I can't do anything until that happens. What does a client need to have prepared or not prepared before speaking with you? Like what kind of documents or information do they need to provide?
Yeah, so it's quite simple. All they really need is 2 pieces of ID. So driver's license and a passport or any government issued ID. And really that's all they need in terms of the physical evidence or physical documentation. And then the rest of the information is just a conversation with their advisor. How much money do they have and how much income, assets and liabilities, and the advisor can input all of that into the Harness system. And that's is really simple. And it doesn't matter if the client has all the information there. That's plenty to get the ball rolling. Oftentimes, the hardest part is just get the ball rolling, and clients. The first step. That's right. And then once they get rolling, it's pretty simple for the clients to follow up next.
Yeah, we've found that too. So like in the investment world, pre-harness, everything was paper. You had to fill out pages and pages and pages of paper to open an account and even put $10 in it. And it could take hours and 10, 15 signatures before then we would have to mail something to across the country for this thing to even happen. And then now working with Harness, the whole thing is digital. So we can open the account online, have it open within a few minutes, call Suzi or email Suzi and say, okay, now let's take the next step. And the whole thing can happen online. All the signatures are online. It's all DocuSign. You can sign it on a computer. You can sign it on your phone. You could print it out and sign it if you want as well, if you really want to have some paper that you touch. But that whole onboarding process and just the simplicity of being able to open it is a breath of fresh air in the industry, I think, right? It's and there's been a lot of talk over the last few years about, we're in the experience economy. Having that smooth onboarding experience makes such a difference, and it just makes things so much easier and so much more pleasant. And also because it's digital and we have to fill these things out, we also know that like when the account is open, we know that we have done all of the things. We've signed all the things, checked all the boxes, because otherwise it won't let you get to the next step. Whereas when you're doing it all on paper, you might have missed form 17-33E that needed a signature in box 4, but not in box 5, which is the way that the investment world has worked and continues to work actually in a lot of places. And it's absolutely insane. But the digital first is
I can speak a lot to that because at my previous work and other firms as well, everything was manual. And so you as an advisor who's initiated the account opening doesn't know why it's delayed until, 3 or 4 weeks later. And then, like you said, you missed one checkbox in page 14. And then that has to get mailed and signed. So I've seen it all and I've experienced it. So what I was pleasantly surprised with that harness was the technology is built so that it gives the advisor a lot of control in the onboarding process. So you're absolutely right. If you don't see the account opening, you know that you've missed a step. But if their account is opened, it's actually the color is green, which always makes us feel good, right? So you know that everything's there, and it happens quite fast and quick. So that's good from the advisor side. I also have a lot of experience working with clients where at first they're very resistant to DocuSign and doing things online. But when I walk them through it, they realize it's really not that painful and really not that difficult. And as I'm explaining how this is so much more secure than, mailing a check or sending paperwork, which could get lost and which happens more often.
Oh, it has definitely happened. Yeah.
Then they always say like, "Oh, are we done already?" Like they're very surprised. And I said, "Yeah, we're done." And it wasn't painful at all. And I think people who do have that resistance, I think they'll be pleasantly surprised at how quick and easy it is. And then afterwards, transferring money, they don't have to write a check. Checks are expensive at the bank.
Right.
So clients are saying, how do I send you money? And I say, everything's done online. And I think the overall user experience from the client's perspective is very elevated because of technology as well.
Yeah, definitely. And then once everything is opened and then we've gone through the process, you've spoken to the client and kind of figured out how do we want to allocate the funds, which types of accounts do we want to open, what kind of portfolios are we building, and say, what's the next steps? Like, how do I as a client then, how do I know what's in my account? How do I know what portfolios I've bought? How do I know like how it works?
Yeah. So first of all, when we chat with the clients, I make sure that the clients understand what type of portfolios they're going to go in. So without a doubt, I make it clear that they're either in a balanced portfolio with 5% private assets, and I make sure that they understand the risks and what type of investments that their money is going to be invested in. So that's first. And then once everything is actually implemented and traded, they will have access to online software, and it's called Digit.
The dashboard, yeah.
Yeah, and it's the client software called Digit, and they'll be able to log in, see their accounts, their investment return, the activities. You can also get tax documents and statements through there. Mm-hmm. So it's all linked in to the client's advisor center.
Yeah, Digit. It's an online dashboard where you can go in and see all the details about your accounts. You can see how much money you've put in, if it's grown, if it's gone down. You can see the underlying holdings. If you go and like open the little, you can dig deep and see like every single thing that you own that's in there, all the different types of accounts. And yeah, the online access to that is really good too. You don't have to wait for your quarterly statement to come in the mail.
Absolutely.
And so with all types of investments, there's always some sort of risk, right? You can make money, you can lose money. What is your approach to risk? How do you manage that? How do you guys deal with risk?
Absolutely. So you're right. There's always risk. And the way that I approach risk is sort of in two tiers. So there's sort of always two lines of defense when it comes to risk from my perspective. So the first level of risk is from the client level. So making sure that I understand the client's risk tolerance and what they are comfortable with, and recommending the right types of portfolios. So how much stock allocation versus fixed income and bonds, but also really understanding, what does this money mean to the clients? So for instance, if I am investing an RESP for my client, and if they lose 15%, does that mean that their son can't go to the university that they wanted? So making sure that I understand what this money means for them,
right,
and thinking from the worst case scenario, but also not just staying conservative. It's also the money has to grow appropriately with that risk to make it a successful investment plan. So making sure that from a client level, that risk is managed and I have direct control of that. And then the second level of risk is the portfolio. So the way that Purpose and Harness manages risk is, I would say, generally conservative. Like, we don't tend to invest in stocks that are too volatile. We tend to avoid Max 7s just because they're treated more as an investment trading vehicle more than for the actual intrinsic value itself. So we tend to avoid those stocks. And then generally just focusing on diversification, having alternative investments in there to bring down the volatility. And also sticking to company financials, just sticking to really good companies. We're very value based. So making sure that any equity exposure that we have, that they do have good company financials. So that's what we stick to. So that's how I would view risk.
Right. So just really understanding, I guess, the why of like, why are we doing this? Oh, it's right, so that your kids can go to school, or so that you can retire, or so you can take a vacation or buy a business. And then making sure to select the types of assets that go into those portfolios so that it can match the risk. So, some people can take more risk than others. And I guess kind of the definition of risk, I guess, in the investment world is, if you could make this much, but the risk is you could lose that much, could you sleep at night?
Right.
Well,
exactly.
Because a lot of people want to say, yeah, I want to make that much. And then you're like, well, on the other side of that, it could all go away. Maybe let's not do that. So having that kind of balance, and then
and there's always going to be noise. So a lot of social media news and a lot of the tariff news, which we won't get into today, but there's always going to be noise and distractions. And so it's important that the clients kind of stay on track with their long-term goals. And that's something that I try and reiterate to clients, is that yes, you are going to see ups and downs, and that's just no matter what investment you are in, unless you're in a guaranteed income, like a GIC. But that's the reality of investing. But I think that's why it's important to work with someone like me or yourself that can guide you through these turbulent times and just make sure that this is the appropriate portfolio for their goals in the end.
Yeah. And then I guess just even that third level of risk that we were talking about was just operating from fundamentals of like company fundamentals. So buying companies that are worth it. And you're talking about being value driven on that. Yep. So not overpaying for things and
that's right.
Just chasing FOMO or hype because some new AI thing came out, so we got to buy it. But
yeah, it's tempting, and in my industry, the next greatest, meme stock is always there, but right. It's important to stay value driven, and we want our clients to sleep well at night, so we don't want them to just get 10, 11% every year. We want that consistent return so that over time they're able to sleep at night and have a very good retirement.
And then let's talk about when we've set it up, we've opened the accounts, we've placed the money, like the money is bought, the underlying portfolios and the different assets that are going to make the assets. And then what happens? Do we just leave it, or does it get rebalanced? Do we catch up every 6 months or every year to make sure that things are on track? Like what happens again as far as managing it over time?
So it's never a set and forget. At Harness, we have an automatic rebalancer, and that happens every Tuesday.
Every week?
Every week.
Okay.
Every week. So if I have a client that is the appropriate, equity to fixed income, let's say is a 60-40, 60% stock, 40% bonds and fixed income, that's what they're comfortable with. Mm-hmm. Every Tuesday, we have a rebalancer. And if that portfolio has shifted because the market has rallied and equities have soared, instead of keeping the client's investments 70-30, we'll reshift it so that it's within their risk tolerance when they're comfortable with that 60-40. So that happens automatically every Tuesday. We also have checks and balances for new money as well. So anytime a new money is inputted into their account, we try and get it invested as soon as we can. So that happens every Tuesday. There's also human touch as well. So as their portfolio manager, if I know that money is coming to their account, I want to get it invested right away because time is money. So right. I try and I can manually input trades. I can always manually rebalance as well, not just through the automatic. So there's kind of two lines of defenses there as well.
Yeah, weekly rebalancing is crazy. That's like, you could not do that before, or it would be so expensive.
Yeah, and again,
the technology probably helps a lot.
Absolutely, and a lot of firms are still doing rebalances manually, and it is a lot of work. So it's really good for me because I don't have to manually do it, but also from the client's perspective, they know that they're going to be staying with that 60-40, especially with this type of market condition.
Yeah, definitely. And then do clients have input into how their portfolio is built? So maybe you're saying, okay, well, we're going to do this and this and this. And then I say, well, I really like this thing. Can you also buy that? Like how does that work? Or is that a no? Or
no, that's a very good question. Absolutely. Clients always have input into what they're comfortable with. That stems the basis that serves as a basis for portfolio construction. I will say that a lot of times, as I think you mentioned previously, clients want 10%, but they want to take zero risk. So right. Sometimes it's just a matter of educating them and explaining that, if you do want higher risk or higher return, it comes with, it costs something. Mm-hmm. So a lot of it is just having that conversation, but absolutely, that serves as the first thing, I talk with them, I say, what are you looking for? What experience have you had in the past? And so I always find that valuable. And sometimes clients might say, Suzi, I don't know what I'm doing. Just tell me what to do. And that's okay too. And I think the education piece is also valuable. So absolutely, they have input into what they can invest as well.
So with a lot of investments, you get different access to different stuff depending on how big your account is or depending on how much money is in there, right? So somebody with a very small account maybe we're not going to be buying individual stocks because it just doesn't make sense to do that. Do you guys have some sort of tier system, or if you have this much, you get this account, or if you have that much, you get that account? Like, how does that work?
Yeah, I would say generally we have just the one kind of threshold, and I would say that's the $250,000 mark.
Okay.
And so that takes you from just your everyday basic ETFs, 1 to 2 ETFs, up until and then up until 250,000, and after that you get access to the private investments, the longevity funds, the focus strategies.
Okay.
Is when you would start to add into your portfolios after 250,000.
So up until a certain point, up until the 250, generally clients are getting like a more basic portfolio that's built out of usually ETFs. And then from 250 plus, that gives access to more types of investments, like you were saying, the private investments, et cetera. And then we talked about at the beginning that tax is a big eroder of wealth. What do you guys do as far as tax strategies? Obviously, we're not going to get in too deep here. We're not giving anybody tax advice. You should talk to your accountant for your tax advice. But where do you guys help with tax efficiency?
So first of all, maximize your registered accounts. So use your tax-free savings accounts, RSPs, spousal RSPs, first home savings accounts if you have clients that are trying to buy a home. So those are all great ways to mitigate tax and reduce tax. And then we also have specific funds, certain funds like SMAs, and SMA stands for separately managed account.
Okay.
And at Harness, we have a whole suite of SMAs. One particular one that's great for tax, especially for Canadians, is the Canadian Dividend SMA. And what that consists of is essentially clients will be able to hold Canadian stocks that have eligible dividends. And once they receive those eligible dividends, they'll be able to be taxed lower than their 50% tax rate. So it's a great tool to get equity exposure, but also reduce a little bit of tax.
Okay. And then what's in an SMA account? You're holding the underlying stocks, or is it?
Yeah.
Yes.
So clients will be able to hold
stocks.
Absolutely. So they're not going to be holding an ETF. They'll actually hold individual ownership of stocks. And another tactic that we used for tax is because clients will be holding individual stocks, at the end of the year, we can also do tax loss harvesting.
Okay.
Which is basically looking at certain stocks that have an unrealized loss versus a stock that has an unrealized gain and matching them so that we're basically coming out net neutral. So it's unique because once you have a portfolio of, let's say, 25 individual stocks, you'd be able to select which ones to sell just to offset some of the tax liabilities, which is a great way for tax reduction. We can also time when to trigger the taxes because, for instance, if a client has, $20,000 of unrealized gains, and if we trigger all of it now, they're going to be hit with a big tax bill. But with Harness and with myself, I can work with you and see what the appropriate amount of tax liability to trigger. And that's another unique way that we can tailor for each client.
Okay. And then is the tax loss harvesting is something that we have to ask for, or does it just happen automatically, or how does that work?
It's definitely a conversation that, first of all, the advisor and myself will have. Obviously, I think the expectation is that, if you do have a client that is very sensitive to tax, and, at the end of the year, when we look at the client's account and they have a large gain, an unrealized gain, that's when we would start having a conversation like, hey, is there a strategy for this? What can we do? And then I would encourage, the conversation to be started. It's not a request or it's an automatic thing. Some people, depending on their tax rate, so it might not apply for everybody. But certainly I would rely on the advisor and also as part of my annual review too, just start asking, what are we going to do about this unrealized gain that somehow it's going to be triggered in the future.
Okay, awesome. And then, so sitting here with, we've got Safe Pacific on one side and Harness on the other side, but we work together. How does that relationship work for the client? Because we're both working with the same clients. And then where do you come in? Where do we stop? And how does that work? Because I know a lot of people just think, financial advisor does everything, but there's a lot of individual pieces that go together into a financial plan. That's
a great question. So a lot of clients ask me that as well. So, the way that I always explain that is their financial advisor. So you in the stance are their primary bus driver. So they'll always go to you for guidance to be able to take you to where they want to go in terms of their goals. And then I'm just an extension. So I'm just your right hand or your left hand or your leg. And I help the clients and you get there. And so I always rely on your planning and what you've created for the client. And then I help figure out an investment that complements the plan so that the clients can actually get to their goals. So I always say, refer to your advisor as your main source of contact for anything. And then I'm just the investment specialist to help you get them there.
Yeah, the relationship is actually really good, and it's working with Harness is what's allowed us to start offering investment management service. Whereas, if you watch the videos on our YouTube channel, we are very insurance focused on what we do, and we've always wanted to do the investments, but it just takes so much work to do that we just didn't have the capacity to do that. But what we're able to do is basically outsource the investment management, the account management, and all of that stuff to Harness. And then we can still work with the clients as far as making the plan and setting the goals and making sure that they're on track to do things, and kind of quarterbacking the whole thing, and then having individual players do individual pieces of it, right? So,
absolutely,
like Suzi would be doing the investment management, but we would also send you to an accountant to do the accounting, and we would send you to a lawyer to get corporate work done, or to get a will done, or to set up trusts and things like that. Like, we don't do it, but we would recommend that you do certain things.
Yeah.
So it's allowed us to expand our offering and our capacity without just completely bogging down the company in investment management, which is a huge world just by itself.
Yeah, and vice versa. It would be not great if I gave, insurance advice to my clients, because I know almost next to nothing in terms of insurance. So for my investment clients, it would be great to refer them to you, and vice versa. I think that's a great way to put it.
Yeah. And then I guess, so next steps. So if somebody's watching this and they say, I trust Safe Pacific, I trust Harness, I'm going to look them up and just make sure that everybody's legit. What's the next steps? How do we get started? If somebody's watching and they say, I want to start tomorrow, how do we do that?
Yeah, so I would encourage them to reach out to Laurent and your trusted advisor, and then he'll get connected you to me and Harness. Clients can also look up Harness if they want more information about me. And I always say, if the clients are coming to me, I'm always going to go back to you, and vice versa. So I think the first step is just to contact your advisor and then get the ball rolling from there.
Cool. Yeah. So if, setting up your RRSP, your TFSA, your ESP, or investing your corporate funds, and you want somebody professional who has a fiduciary duty, who's a CFA and a portfolio manager to be managing those. So you're getting like a superstar to do it, a very qualified superstar to do it. First step is to send us a message through the website at safepacific.com. Those messages come to me. Somebody will reply to you within 24 hours on business days to ensure that we set up a meeting time and really find out, like, what are you trying to do here? Like, what's your situation? What are your goals? What are your concerns? And then from there, we take the next steps. We make the plan, and then we say, okay, now let's go open up these accounts, or let's transfer the money. You have them sitting in a bank somewhere, or you have with some advisor that you haven't talked to in some years, and you would rather work with somebody like us. And then we would work with that together, and have that ongoing relationship over time. Was there anything I missed? Anything that I should have asked that I haven't asked, or?
No, I think that covers a lot of things. I think if I can add, one piece of advice to clients, and, because we're in Vancouver, I think there is a growing number of individuals and families that are trying to grow their wealth. And I would say, again, the Canadian government is not very nice to wealthy individuals and families. So I would say, I think it is imperative to work with financial advisors like yourself, to be able to get advice and to mitigate all these different taxes and cuts and payments that they have to make. So especially for business owners as well. So I would encourage everybody to reach out and work with a very trusted advisor who's very confident, like Safe Pacific, cool, and get save their money that way and get things and have a plan, essentially.
I promise I did not pay her to say that.
No. I see clients getting dinged for taxes way too much. So I think it's incredibly important what you do.
Cool. I appreciate that. With that, we'll wrap it up. If you got any value from today, please tell the robots that you love us. And the way that you do that is you hit the like button, you hit the subscribe button, you leave a comment. All of those things help the algorithm to send podcasts and videos like this to more people like you who do need this kind of advice and who do want to take control of their financial future, right? They want to build wealth here in Canada, especially if you own a business, especially if you have a family, especially if you own some real estate. That's the majority of our clients. And those are the people that we work really well with. And we really kind of have an understanding of your situation and what a lot of people of your peers are trying to do. Suzi, thank you so much. I hope you had fun. I know it's people's first time on the podcast. If they've never done it before, it can be a little bit nerve-wracking, but hopefully it was a good experience for you today.
Yeah, I had a lot of fun. Thank you for inviting me.
Yeah, and then we should do this again.
Absolutely.
Cool. All right, thanks everybody. We'll see you next time.